Hello grade 12s and welcome to this lesson on personal tax. Today we'll be helping Tammy understand the document that she needs to complete for her income tax return. The document is known as an IRP5 form. During the year, Tammy has been paid a regular salary. Every month, certain deductions are made from her salary. Some of these deductions are her benefits, like medical aid and provident fund, and some of these deductions are tax-related. At the end of the tax year, all of this information needs to be submitted in a tax form. The Revenue Service will then check that Tammy has paid the correct amount of tax. If Tammy has paid too much in tax, the Revenue Service will reimburse her. If she's paid too little, she will need to pay the difference. The IRP5 document is issued at the end of the financial year by Tammy's employer, the Department of Education. This is issued to Tammy as proof of all the income received and deductions made on her remuneration over the last year. This document is also known as the Employee Tax Certificate. Let's discuss the information that is recorded on this document so that Tammy has a general idea of what all the information is that is recorded on this document. This will help her to correctly complete her tax return. On the form, all of Tammy's personal details, her employer's details, and a summary of her remuneration for the last year are summarized in detail. Tammy's employer will submit this IRP5 to the Revenue Service. Tammy is also given a copy of her own records. It's Tammy's responsibility to check that all the information is correct. She must then submit this information on an income tax return form called an IT12 form. The information on the IRP5 is all coded. These codes are linked to different methods of calculating tax, so it's important that they're entered correctly when completing the income tax return. Income tax is made up of two types of tax. We get standard income tax on employees, also called SITE, and pay-as-you-earn, also known as PAYE. SITE tax is calculated on the first 60,000 Rand that is earned from an employer. This tax is usually deducted directly off your wages or salary before you receive it. The employer is responsible for deducting this money and paying it over to the Revenue Services. PAYE tax is calculated on the amount more than 60,000 Rand earned. The employer also pays this tax over to the receiver, but it is the responsibility of the taxpayer that all tax is paid. This is the reason we submit tax returns. Tammy asked her accountant friend Rachel how tax is calculated. Rachel explained that the calculation of tax is done with the use of tax tables. These tables are reviewed annually by the Minister of Finance according to the budget statement. Tax brackets are the divisions in the rates of tax where the rates change as your income increases. South Africa has a progressive system of tax. This means that the tax rate increases from one bracket to the next. In other words, the more you earn, the more income tax you pay. The rates of tax can be defined as the percentage rate at which a taxpayer's tax liability is calculated. For example, if Tammy earns 170,000 Rand per annum, we need to determine in which salary band she's placed. The salary of 170,000 Rand is placed within the second salary band in the table. Tammy notices that the percentage indicated in this salary band is 25%. Rachel explains that the 25% is her marginal tax rate. This marginal tax rate is a statutory or compulsory tax rate and is determined by the Minister of Finance. Tammy now had a good idea of what all the codes meant on her IRP5 form and how the tax on her remuneration was going to be calculated. Thank you for joining us, grade 12s. And remember, the task for this section can be found in the Finance of Business task video. You'll also be able to learn more about finance on our website www.mindset.co.za/learn. Goodbye!